Hi, I'm James Paholic from CMG Wealth Management, bringing you another market insight. Today's April 29th, and first quarter earnings are well on their way. So far, so great. About 90% of the S&P has beat their earnings, and we are right in the middle of this first quarter earnings season. We project that it's going to continue. It looks like most of the analysts out there have projected for earnings growth for the S&P to be around the upper teens and some even higher than that. Notably also small companies. You know, last year, the first few quarters, small companies' earnings were actually down. It was the fourth quarter where we saw a little bit of a change, but the small companies' earnings forecast for 2026 is supposed to be somewhere around 30%. So we have some key catalysts that are going to drive earnings across the board, coupled with the fact that the trend is up. 2026 looks like a good year. A few notable things. One, with all the geopolitical issues that are out there, the war in Iran, just a reminder that 10% pullbacks happen about once a year. Since 1928, it's about a once a year we see a 10% pullback, sometimes even twice a year. We've got a new Fed chair that's coming here just in a few weeks that should be accommodative, and we are seeing the benefits of the big, beautiful bill drive more velocity and money into earnings. And so far, the inflation thing, which is something we follow very closely, is in check. We'd like to see that come down. It is worth noting that as the stock market goes down, typically you'll see a flight to quality and the bond market go up. With this last sell-off because of the Iran, we did not see that happen, and that's a little concerning for us. It's one thing that we're constantly watching. Whether it's stocks or whether it's bonds, we're watching these market events as they unfold, and we are deciding whether there's a risk there or what types of risks are there, what type of opportunities. And if need be, we will pivot. As a company, our goal is not only to grow, but to preserve wealth. And the ability to pivot at different times when the trend tells us, it allows us to be in a position to, one, preserve wealth, but also put us in a great spot for opportunities. As you well know, in some of the bear markets of time past, we've seen, a 50% drop with the tech bubble, a 60+% drop with the financial crisis that we had in '08. And right now, we don't perceive those big things happening, but it can be a surprise. With $39 trillion in debt, that keeps us up at night, and we are something we're watching very closely. So as always at CMG Wealth Management, we thank you for being a client. We'll be watching these markets, but we believe 2026 should be a positive year. If you know other friends or people that could benefit from our services, we found that a lot of clients in their retirement aren't really positioned to ride down a bear market. And with the bond market not acting like it usually does as a defensive mechanism, it is a great time to maybe review your strategy. So if we can help any of your friends, feel free to refer them to us. As always, thank you so much for being a client. We will be back with more market insights. Take care from CMG Wealth Management.